Good morning, everyone. Welcome to Hit the Bid here on July 20th. This is Ty Robbie here with your Week 29 Market Watch. Today we're going to be running through these charts and seeing what last week's action looked like and how it's going to help us navigate these markets as we head into Week 29. As we can see here on the big board, it was a fairly uneventful week. However, we did see cattle and equity prices hanging out up there near all-time highs, showing good acceptance of these higher prices. Did see this crude oil market continue to balance out in the 60s and a nice little relief rally coming into this corn market, which could be setting us up for some good opportunities as we head into the new week. So let's jump right in. We got the August live cattle on the board here to start us off. Did see some modest gains in this fat cattle market. Prices pushing up a little bit higher above the prior week's high and putting in a new contract high on this August contract on Friday up there at 224.55. We did see prices opening up early last week, testing that prior week's range lows down there near 219, showing a nice rally up towards 224.5. And then we did see Wednesday, Thursday, and Friday's action balancing out in about a $2.50 range here between 222 and 224.5. Good upside here as the bulls continue to push this market higher. Nice low volatility grind as we get into this leg and we're pushing up into these all-time highs. If we take a look here on a lower time frame, we did see that early sell-off on Monday, just testing that value area low from the prior week. Good rally up into these new all-time highs up there near 224. As you can see, we did start to build up a decent amount of volume here in this $2.50 range between 222 and 224.5. Good back and forth action between Wednesday and Friday as we do continue to see higher highs and higher lows, showing a good supportive action by the bulls here as they continue to push this market up. We are seeing, like I said, a decent little concentration of volume here, so it's going to offer us some good levels to trade around as we head into Week 29. We do have our bear pivot up here listed at 222 today as we head into the new week. We do have multiple touches and a good support point here at 222 that has kept this market supported late last week, showing good buying activity. Each time it gets down there, we've been pushed back up towards that contract high at 224.5. At the moment, we still have this big picture uptrend remaining intact. We are up here at overbought levels a little bit, prices getting a little bit extended, but we do just have a nice low volatility grind higher here. Just good ranges getting carved out as this uptrend just keeps on drifting higher. We don't have a whole lot of concern about any downside from here. We do just want to be cautious here if we do get offers below 222 that could get us into pullback territory. Offers below 222, we should see this thing get marked down to 220, which is our prior week's point of control. That's going to be this high volume node dating back to last week. And anywhere from there, we do have plenty of support between that 218 and 220 area. We can see this rising 20-day moving average right here at 218 printing from Friday. Good support in that $2 range between 218 and 220. So in the event of a dip, we do expect to see dips get bought and offer a good buying opportunity as this uptrend remains intact, and we expect that to keep rolling. However, as we head into the new week, as long as we stay above 222, we expect to see that upside continue drifting up here into the 220s and potentially pushing up there towards 230. This cattle market remains strong and healthy, and we should see this upside continue. Like I said, we do have a chance for a pullback in the event of offers below 222. However, we do still have a little bit more upside to go as this market just keeps on drifting higher. So we'll look for that upside to continue, or in the event of a pullback, let's be ready to buy some dips in the week ahead. As we go down the line, continue to see prices just hanging out up here near all-time highs in this fat cattle market all the way out to those early 2026 months. We do expect to see this fat cattle market continue to rally into the summer. Let's head over to the feeders now. Last week we did see price just hanging steady inside the prior week's range. No new all-time highs here on this August contract at least. If we go down into some of these back months, we'll get there, but we did see some all-time highs printed last week in some of these back months, but this front month August contract did just continue to balance out. We did see price put in this all-time high back here on the 10th of July, trading in about a $8.20 range, and since the 10th of July, we've seen this market just continue to trade back and forth in that $8 range. Showing good support down here from 318.65 and prices just being capped up here right around 326. So these are going to be our pivot levels as we head into the new week. We do expect to see this market continue to balance out as long as we're trading between 318.65 and 326. Offers below 318.65 will mark us down to this 20-day moving average, and below that we should test this prior swing high right around the 314 level. We do have plenty of support here on the down below. Plenty of demand pushing this market higher at the moment. Got our key moving averages rising here, which will be good supportive opportunities in the event of a pullback, as well as this big picture uptrend line just continuing to hold this market up. However, if we do get early bids above 326, we should see this thing take another leg higher, pushing up here towards 330 and potentially beyond. After balancing out in about an $8 range, we should see this thing pick a direction here. We just need to wait for a daily close beyond either side of these pivot points, and that should lead the next leg. Breakdowns below 318.65 will lead to just a healthy market pullback here and a big picture uptrend that should lead to some buying opportunities. However, this uptrend remains intact, and we should see just a nice low volatility grind higher and see this market continue to push up into the 330s as if we get bids above 326. So be using these levels to trade around this week. We do have a wide range here that this market has been stuck in, so in the meantime, let this market balance out and don't get caught up in the chop here. But we do expect to see this upside continue in this cattle market. Let's go down the line into some of these back months on this feeder market. We did see Thursday put in a new all-time high in these October, November, January, and March contracts. We did see those all-time highs in some of these back months coming in last week, while this September and August contracts were lagging a little bit and still haven't broke that July 10th all-time high. But this market remains strong. We do expect both fats and feeders to continue climbing here. Any breakdowns below our bear pivots this week will just lead to buying opportunities, and just be waiting for a pullback or a dip to buy. But in the meantime, stay long and strong here as this market is expected to continue climbing higher. Nice strong cattle market. Let's jump over to the December corn futures. Last week we did see a nice relief rally here after this corn market has been beat down to new contract lows. Over the last few weeks here, we have seen a nice breakdown out of this range on this December contract, breaking down below 434 and showing multiple rejections here over the last few weeks, pushing this thing down to 407.5 as the new contract low. This market remains in a big picture downtrend. We did see last week how we did just show a nice steady pullback that Sunday night opening, putting in that contract low, and then a nice steady relief rally all week long, pushing up here, and see a nice balance action between 426 and 430 there on Friday. Plenty of resistance overhead here. We did make it above this 20-day moving average, but we still have lots of resistance here in this prior gap from the July 7th Sunday open. That gap lower that ran all the way down to these contract lows is a spot that we'll be looking for resistance to step in as we see this market. If we see this market continue to push up here, we do have resistance at this gap, this declining 50-day moving average, as well as this big picture downtrend line. Plenty of resistance over here in this 430 to 435 area. Be looking for the bears to step in and offer resistance and turn this market back lower. We do expect to see corn prices continue getting cheaper throughout the summer here and pushing down near the $4 mark. We do want to wait and see price balance out and confirm the next leg lower before we just start jumping into this thing. At the moment, we are seeing a good consolidation here between 426 and 430 from Friday. So in the event of offers below 426, we would expect to see this market continue drifting lower down towards the $4 mark. But in the meantime, let's wait and see this. That's something we'll be monitoring this week, is this market balancing out and offering a good short setup here as the bears look to continue pushing these corn prices lower. Let's jump over to the crude oil market now. Last week, pretty quiet market over here, pretty slow, choppy, messy action here. This crude oil market doesn't seem to be very motivated directionally at the moment. We do see this market just staying pretty comfortable here between $65 and $70. This market is expected to remain choppy and have very little volatility at the moment. There's not a whole lot of information out there to suggest any sort of directional moves here at the moment. So at the moment, we do expect to see this range continue to hold. We did see prices coming off of those range highs up there at 69.65 early last week, pushing lower and just showing nice small tight ranges with good back and forth action. We did see our bull pivot here at 65.42, bear pivot up there at 69.65. As we get down here near the low end of this range, we do expect to see the bulls push this market back up. And if we are up here near the 70s, we should see the bears offering resistance. And this market should continue to chop around these major moving averages as they don't really have a directional bias at the moment. We do remain neutral in this market, so at the moment, be looking to play the edges of this range or just sit tight and hang tight here while this crude oil market looks to choose a direction. So uh, we look for that choppy action in this crude market to continue into the new week. We'll be monitoring this market for any closes beyond the edges here of this range before we start looking at a real directional move. So in the meantime, just expect to see this range-bound action continue. Now let's jump over to the equity side of things. Each of our indexes continuing to balance out here over the past few weeks. We did see the S&P market, this S&P index hanging steady over the past few weeks. Throughout the month of July here, we've been stuck in about a 100-point range between 62.40 and 63.40. This market just continues to drift back and forth. Average ranges of about 60 points. Not a whole lot of excitement here, just a nice choppy market here while this market is accepting these new all-time highs. We can see here just a nice wide range getting carved out between 62.40 and 63.40. We did see tests of both sides last week. A rally early, a dip lower down to the bottom end of the range right there on Wednesday, and then a push up here near the highs on Friday. We did see this day session open here above the range at opening up there above 63.40. We did see the bears push this thing back down inside these bounds, so we weren't able to get this close above 63.43. So we do expect to see this range continue. This big picture uptrend remains intact, however, so early this week, if we do get bids above 63.43, look for this thing to keep pushing up here towards the 6400 mark, and look for that upside to continue as this environment remains very favorable for stocks. The tech sector has been leading things here as the NASDAQ does remain a little stronger. It had a nice strong close on Thursday, and then Friday just balancing out up there at that new all-time high. Not a lot of rejection, but this market continues to drift higher in these nice tight ranges. Did see over the last 2 weeks here this Dow index pulling back to this 20-day moving average, showing good support last week, bouncing off of it on Wednesday, and rallying up. Not a super strong close on Friday, but a nice bounce off that 20-day moving average nonetheless. We should see some of these Dow stocks continue to rally and head back towards this all-time high as it has been the laggard here. Look for the Dow to head towards all-time highs, and that should carry this S&P index out of this range we've had throughout the month of July. So look for that upside to continue in the stock market. However, if we do see any dips coming down below this bear pivot at 62.40, we should see a very good opportunity for some good value and dip buying opportunities. So be looking for deals in the stock market in the event of a pullback. However, we do expect to see this market just keep on drifting higher. So that's all we got. As far as the charts go this week, we do have some news this week. We do have Fed Chair Powell speaking Tuesday morning before the open, as well as some jobless claims coming in there on Thursday before the open as well. Other than that, pretty uneventful week. Not a whole lot of excitement to be expected. This market's just going to be looking for that next Fed meeting to come out, which will be the last week of July here. So that's going to be what this market's looking forward to. So don't be expecting a whole lot of volatility here this week as this market awaits to see what the Fed has to say at the end of the month. That's all we got for today. Hope everyone had a good weekend, and we'll catch you tomorrow night for closing comments.